Good evening, channel members. Welcome to our February exclusive channel member video live stream. It's a live stream. We're live, not pre-recorded. Yeah, it's great to be here once again. I love these. It is a chance for me to hang out with you guys for an hour and a bit and give you guys a little bit of extra attention, which is always good, always good. I see that Ron has been very busy over in the comments, and we're going to get to that all in a moment. First of all, I want to start off by thanking you guys for being channel members. Every little bit that you guys contribute to the channel certainly goes a long way, and I definitely appreciate that. Now, we do have a topic for tonight, and it's all about buying Canada. So this is a very Canadian, very Canadian episode for sure. So before we start jumping into the material I have prepared for you guys, let's go through Ron's comments. Let's get him out of the way, and we'll see what Ron is saying. So Ron couldn't make it, but he did drop in ahead of time to drop us off a little bit of the things he wanted to bring up during the stream. So here we go. Let's see. Unfortunately, I won't be able to attend this live stream. A couple of things I was going to add were the following, and he's numbered them. Number one, with interprovincial trade barriers disappearing, I could see trucking companies benefiting as well as craft breweries and wineries. Yeah, absolutely. If you think about it, like right now in Ontario, you can't just as far as I know, now I'm not a drinker, so I could be completely wrong on this. But my understanding is, if I go into the beer and wine store, I'm not going to see anything from BC. I'm not going to see any of the BC wine. I probably won't see Nova Scotia wine, any of those. And BC makes some really good wine. So as of course those interprovincial barriers come down, and we can buy BC wine in Ontario, Nova Scotia wine, Newfoundland wine, that's going to be really cool. And yeah, that could certainly be an uptick in business for those wine companies. But the question I guess I would have to ask is, will they be able to export enough to the provinces to make up for the business they might lose from their US exports? So that would be the big question there. But yeah, that is definitely something worth looking at for sure. All right, number two. Oh boy, Ron, you put a lot of thought into this, Ron. With all the uncertainty and doubt, there may be opportunities with discounted stock prices in the automotive sector, aluminum, and steel. Yes, a lot of these companies get really hit hard by tariffs. And looking at aluminum and steel, we already know that they're going to be affected by the 25% across the board. Then they're also getting an additional 25%. And it looks like lumber as well is probably going to get an additional 25%, probably pharmacy goods, drugs, things like that. And chips. I don't think we make a ton of chips up in Canada, but yeah, these are things where if you get the sales starting to pull back and these things start to depress in value, that's an opportunity, because these tariffs are not going to be here forever. Worst case scenario, they're probably here for 4 years. That's worst case scenario. Hopefully we're able to resolve them sooner than later. But with this current administration in the United States, it's hard to say. It is really hard to say. But yeah, if you're a long-term investor, some of the deals that we're going to see through the whole trade war, they're going to make you money on the long term. On the long term, yeah, absolutely. The things I would be wary about, though, are your small cap stocks, because some of them may not survive. And it's sad to say it, but it is true. So you want to almost be looking at larger cap, bigger companies that are going to do well. So, and we're going to get to all of that here momentarily. Let's see. Ron said, number three, stocks that are to be shunned by Canadians and the rest of the world are yet to feel the loss of business. So Tesla comes to mind. Yeah. I mean, there's most of the pain right now that you're seeing, any volatility that you're seeing in the market now, none of it none of it is from the actual impacts of the tariffs. They haven't even begun yet. Anything you're seeing now is companies preparing for tariffs. Companies starting to, some companies have been laying off people already. Some people are preparing. They're tightening their books, tightening their budget, getting ready for what is to come. So yeah, absolutely. Ron says keeping extra cash on the sidelines to take advantage of deals during the next couple of months might be smart. That's not even a might be, Ron. That's an absolutely smart. If you haven't started creating a cash position, I'm not saying throw everything into your cash position. Nah, not at all. But you should have at least a little bit. Like I would say at least a percentage, depending on what you're comfortable with. Maybe 5-10% of your investing money each month going into whether it be a cash ETF or whatever you normally would use as a cash position. Because, when things do hit the fan, that's when it's going to be good to utilize some of that cash for sure. And Ron says swapping US dollar stocks for Canadian dollar stocks locks in a favorable exchange rate right now. Yeah, absolutely. Right now, if you're selling your US stocks and then converting, of course, I always hate the conversion fees, but if you are converting them to Canadian, you're, with a weak dollar, and the dollar is going to get weaker. It's favorable right now. And then on the other side of the tariffs, yeah, you're making some money. You're making some money there. So that's not a bad idea. Not a bad idea at all. All right. And let's give me a second here. I'm going to pull up the extra screen I wanted to show. All right, here we go. There we go. I have pulled up another screen. I'll show you guys right now, just in case we need it. It's a map of North America that we can write on. Of all things. Love it, love it, love it. All right, so that was all taken care of. Now, guys, keep in mind, just because we have a topic, it does not mean you can't ask your questions. You guys are the channel members. You guys are in control. You guys are telling me what to do. And this here, of course, is the topic that you guys voted for. So we're going to be talking about the Buy Canada movement and the impact it's going to have on investing. So that's kind of an interesting thing. And you'll notice one of the things that Ron had mentioned was, well, the one I left up. I left it up for a reason. Swapping US dollar stocks for Canadian dollar stocks. That's going to be one of these interesting things that come into play. Is it time to be ditching our US stocks? Is it time to buy completely into the Buy Canada movement? So we're going to talk a little bit about all of that tonight. So the fun. So first of all, for any of you who have been living under a rock, let's start off with what the heck is this Buy Canada movement? So, of course, by now you've all heard of the tariffs. You've all heard of Trump threatening 25% across the board, 10% on oil, an additional 25% on aluminum and steel. That would be added, so cumulative to the other 25% across the board, so 50%. Also, forestry and forestry products. He's looking at another 25 on that. Now, that probably isn't coming till April for that, my understanding right now. Also, pharmaceutical goods and chips. So those would be the ones so far. Now, the way he's been going, it seems like every couple of days or so, he gets a new idea. So there could be more. And it's going to be interesting. And we have yet to see fully, as far as I know right now, the Canadian government, their initial wave was basically a whole list of items that they were going to put tariffs on. There is a bit of a cry for, dollar for dollar, hit them back. If they hit us hard, hit them just as hard back. Kind of like the whole Doug Ford thing. So that's kind of another interesting thing. We'll have to see how that's all going to roll out as we get closer. And we're not that far away. It's only a few weeks now until we hit the first supposed, the date that the first tariffs may actually go into impact. But the actual Buy Canada movement is, well, and it makes sense on multiple levels. The whole idea is that, hey, let's not send our money to the US. Let's buy Canadian. Let's spend our money in Canada. Let's put our money back into the Canadian economy because the Canadian economy is going to need it. It's absolutely going to need it because we got a world of pain in front of us. Our economy is not going to like that. So yeah, that's part of the whole movement. Buy Canada, put your money back into Canada, and that will help. One, and the other, I said it was two-pronged. The other thing is that if you're buying Canadian goods, you've got no tariffs on them, right? So, why buy something that comes from the US and have to pay an extra 25% once those tariffs come into place, when you could buy the same item made by a Canadian? So, yeah, absolutely. That's what the whole movement is. Now, when it comes to investing, that's interesting. That's very interesting because there's a couple of avenues here. One, we sit north of the number one economy in the world. The US market is just ripe for profit, ripe for opportunity. And as investors, well, that's what we're looking for. We're looking for that opportunity. We're looking to take advantage of that market and make money. So, should we be changing the way we look at it? Should we only be investing in Canada? And here comes the rub. When you look at investing in Canada, should we only be investing in Canadian companies that are not, not really U.S. exposed? With ETFs, should we only be investing in ETFs that stay the heck out of the United States? I don't have the answers for these questions, guys. This is something we all have to ask ourselves. But, it's going to be kind of an interesting thing. And that's kind of where this relevance is coming in. From the Buy Canada movement, we can look at it from many different levels, as we just did, as we were just sort of looking a moment ago. But here's that thing. As investors as well, looking at those companies that could benefit from the Buy Canada movement, that's not a bad idea either. Sort of like as Ron had brought up, with trade barriers coming down across the country, now might be a time to invest in, winery or alcohol. Invest in the companies, not so much the fluids. I mean, you could probably invest a little bit in alcohol on the weekend if you really want to, but we're talking about the companies, and that's kind of an interesting thing. And I think overall, this is going to have some ramifications. So one, obviously, political ramifications we've already seen. When it comes to the polls, the conservatives have held a very, very big lead over the Liberals. But here's the thing. As these tariffs are getting closer, and as Poilievre still was basically on the carbon tax election front, it hurt a little bit. The conservatives dropped a little bit in the polls. The Liberals went up a little bit, but a new poll came out, and I haven't had a chance to really get too deep into it. But I was looking at it on another channel yesterday, and according to the poll, if Carney wins the election right now, he's sitting at about a 37% compared to the conservative 40%. And you might be thinking, what? Where's he getting all of these votes from? Because the conservatives haven't really lost any ground, and then we're talking overall popularity. We're not talking seats at the moment. But what is really interesting is that with Carney, and he's the only leader that's showing this in the polls, he's stealing a whole bunch of support from the NDPs. He's taking a little bit from the Bloc, and I think the Green is fine, but the NDPs are hurting badly. Like they're losing a big chunk of their support to Carney. So one of the kind of an interesting thing is that he's been looking at leaning maybe a little bit more right to try to win back some conservative voters, but maybe he needs to double down on the left if he's going to most of the NDP away, and that could be really bad for Jagmeet and his party. So that could be there could be very few NDP in the parliament the next election, depending on if this holds through. And I really want to see a little bit more on this, because I thought that was just absolutely absolutely crazy completely. But anyway, that's a little bit on the whole policy. But I did ask earlier about, is it really feasible? Is it really feasible to have a 100% Canadian portfolio? So there are pros and cons to that idea. One of the pros is that, of course, you're supporting the Canadian economy and businesses. Great. I love that. No doubt about it. I mean, most of my portfolio, I will admit, most of my portfolio I'd say 80% of my portfolio is Canadian. I love that about it. And I love supporting Canadian businesses already. But am I ready to go to that 100%? That would mean that I don't have much for tech. So that's another thing I'd have to think about. Now, one of the other big pros, of course, of going 100% Canadian is that there is potential for reduced exposure to some of these foreign trade risks. So the tariffs, depending on what everything is going to get hit by the tariffs, at least collateral. Things that do a lot of, like businesses that do a lot of trading within the country and they're not really importing, exporting, they're going to be fine. They're going to be absolutely fine for sure. The other big pro, of course, of going to 100% Canadian portfolio, and this is for, I guess, people who are beyond just using their registered account. So if your registered accounts are full, you get a lot more tax benefits by going Canadian. So for example, you guys have probably heard me talk about eligible dividends. So eligible dividends, they pay, you're not paying as much tax on them as you would on foreign income. Well, foreign income is 100% taxable. So there's no credits for that. You're paying that full on tax. So that's kind of where it all boils down to. But once again, if you go to 100% Canadian, there's a couple of cons. We kind of talked about the positives. So one of the big cons is, of course, you limit your diversification. Canada is very, we're energy and financial. Those are our big, heavy hitting sectors. The rest, maybe real estate, you can consider that kind of big, but we don't have as much diversification as what they have in the US. Even with our Canadian tech sector, we don't have a lot. We don't have a lot to choose from. So that's kind of a big thing right there. So diversification, yeah, that's kind of big. Also, we do have, when you have a lot of heavy weighted sectors, that can sometimes also make you very prone to some of the domestic economic downturns. So that's just something to keep in mind, because you don't have as many really strong sectors to sort of balance things out. So if our main, like, so for example, of finance, energy, materials is another one that's pretty strong. If we got something impacting materials and energy, definitely those two sectors alone, they will be impacted harder than what the financial sector will be hit by. Although we have to remember something else too. With the financial sector, there's still that wave of mortgage renewals, the big part of the wave. Like it's begun, but the big wave is coming this year. Like it's coming, it's already happening. Like it's happening now. It'll be happening throughout this year. So that will be a bit of a strain on the financial sector as well. Luckily, rates have come down quite a bit. That is going to help for sure. So that's just something to keep in mind. So we got the rates coming down. That's good for finances. It's good for people who are renewing their mortgages, hopefully lower rates. Now, the interesting thing too, I always get a question about this, is what is going to happen to the rates? Because obviously one of the side effects of these tariffs is prices going up. Well, what is prices going up? It's a form of inflation. Even though it was caused by the fact that there's tariffs, it's still nonetheless prices going up, and it will be inflation. Now, the primary role of the Bank of Canada, of course, is to try to keep inflation in check. And they will do that when inflation goes up, they raise rates to bring it back down. However, the secondary role of the Bank of Canada is also to look at the economy. In this case, while the prices are going up, our economy will be going down the drain. So they kind of have this they kind of have this two-prong problem. Normally, normally inflation would trump everything, but these are extenuating circumstances. And the economy is going to be in such bad shape that, quite honestly, we it has to take priority. So as a result, the Bank of Canada might even still lower rates a little bit lower. They're going to try. They're probably going to try to. I imagine, I think the next rate meeting will be a pause, but I don't see them going back up. I see them pausing, or maybe the occasional 25 to try to stimulate that economy as it gets into worse and worse situation as we move into a recession. So that's going to be really, really interesting. So the good news is if you are coming up on your renewal, chances are the rates are not going to be going back up on you. So that's a good thing. That's a really good thing. And that may factor into your decision on, what you're going to do with your mortgage renewal. So that is something to keep in mind. I think that's, what's the words for it? It's just something I think it needs to be at the front of mind. And like I said, I've had a lot of people ask me about it. So that's kind of cool. It's tea time tonight, guys, because I don't like to have coffee on the late night stream. So having a tea. So good. Now, here's another interesting thought. So there's always been a bit of an argument between stocks and ETFs. So, which are better? Obviously, when it comes to diversification, ETFs can give you a better bang for your buck because you can get one stock, which is as an ETF, and you can get that diversification with that ETF right across multiple sectors, multiple companies. They're fantastic for that way. And one of the things that comes with that is that lower risk. So when you have a sector that is more prone to importing, exporting, maybe getting an ETF exposure might make a bit more sense because you'll at least be spreading it out a little bit. So there might be, like within a company that does a lot of importing and exporting, there may be companies within there that handle it a bit better. So with an ETF, you'll have some of the better companies. You'll have some of the ones that are struggling more. That'll all get sort of evened out, so you get a better average. So that's kind of one of those things. So you're looking overall, like I said, it is lower risk with an ETF. And when we're in a time when defensive investing is kind of the order of the day, and when the economy is not doing so great, lowering your risk is never a bad thing at all. Now, one of the interesting things too is if you are looking at ETFs, what I normally will say too. Now, we're not talking right now about income ETFs. We're talking about just your salt of the grain total return. What's beautiful about a lot of these is a lot of them are passively managed. So by being passively managed, that means that they still rebalance, but there's not a lot of action on them. So usually what it is you take VFV. So VFV, they track the S&P 500. So that's what they're buying. And it's a passively managed. So, they're pretty much just following and tracking, and they're maintaining whatever weight that they've determined on that. But because of that, it's easier to manage. And then you end up getting really, really, really low management fees. That's not a bad thing. So when we look at Canada, something like the VCN. So that's another Vanguard. That's the Vanguard FTSE Canada all cap. And that's another really, really good one. Um, XIU does the that I think they do the TSX 60. So there's once again another one that's really good. So, there are some really good ETFs out there for sure. Now, when we look at stocks, now I did say, you know, I kind of really sold ETFs, but stocks do have some advantages too. One of the things that are really good about stocks is you do get a greater control over your holdings because you're the one who's deciding what's in there, opposed to a management, a manager, like a fund manager, deciding which stocks they're going to put into that ETF. And there can be a potential for higher returns when you're dealing with individual stocks, of course. So we've all seen that. I mean, look at BlackBerry right now. BlackBerry's just owning it. So that's a great example. Now, one of the things with stocks, though, and this is kind of a downside, is that it does require that you spend more time. So, you're looking at a lot more research and you're also looking at a lot more monitoring just to make sure that something's not going astray, where you don't have to do that as much with ETFs because your fund manager does that for you. That's why you're paying, of course, the management fee. So some of the good stocks, I think, right now is, the financial sector, I think, it's kind of interesting. Like, the financial sector has that mortgage wave coming at them, but they're not really doing the importing, exporting. So they're kind of strong in that way. And if you guys remember it was this one, wasn't it? Yeah, it was the last one of these. We actually kind of broke down how the tariffs were going to affect individual stocks. And banks, they were one of the ones that did not get hit that hard. They'll get hit by collateral, of course. But yeah, so some of your this is what I'm looking at right now. Things like the banks, I think, are still solid, even though they will be struggling. Keep in mind, they have a lot of loan loss provisions. That's going to help them. Some of your energy stocks are fine too. Yeah, they're going to get hit with tariffs, but they're not going to get hit really heavy because despite Trump saying he needs nothing from Canada, he knows he needs the energy. There's no way around it. He can't throttle energy. So that 10% might be as bad as it gets on energy. For that reason, I think a lot of your energy stocks will do fine. Your utility stocks, I think, are going to be absolutely golden because they love, well, one, energy stocks, they're not dealing with importing and exporting. They're selling, locally, TransCanada. Also, take a company like Fortis. Fortis has a big presence in the United States, but, they're selling down there. They're not moving oil and things like that or fuel across the border so much. It might be a little bit, but for the most part, they'll be strong because of that. In addition, the low rate cuts, utilities love low rates because that means they're paying less on their loans and they can take out more loans. And you might be wondering, what? Why? Why add to your debt? And that's because this is the time when they start expanding. They can look at these different projects that they can build more, and they will. And that will help. That will also create jobs too, which is not a bad thing, especially when you will have a lot of sectors that are downsizing. So that's pretty cool. That's pretty cool for sure. So that is definitely something to keep in mind. So when we look at those Canadian sectors for profitability, we already kind of mentioned two of them right off the top. So of course we have energy. I think energy will be absolutely fine. Utilities, they will be fine. One of the other interesting things too is with energy, the longer this goes on, the more energy customers Canada will get. And I know right now the Trans Mountain pipeline, it's not pumping to capacity, but it probably will be soon. And we will sell more oil to Asia. We will sell more oil to Australia. Hopefully we start to actually build a west-east line because that would be good as well. As I also mentioned, the financial sector, that's another one to be looking at. As we get through this mortgage wave, they're ready for it. I think they're going to be strong. I think, and we've already seen the banks have been really resilient. Even with the mortgage wave beginning, they've been very resilient. So I'm looking forward. Like, we got earnings coming out. What is it? This week? Excuse me. This week coming up, we have bank earnings coming out. So I am looking forward to that. Materials and mining. That's another area too. Right now, I mean, we are a leader. Canada is a leader for a lot of precious materials. So everything from gold, potash, lithium, we got it all. And demand for that will not be going down. If anything, it's going to remain pretty strong. And maybe we won't be selling as much of it to the United States because of the tariffs, but there's a strong demand for that in Asia as well. And that stuff is a little bit easier to transport. We can ship it. We can use the trains, get it to the ports. We can sell it. So that's kind of another interesting one. So companies like Barrick Gold, Tech Resources, Nutrien. I think Nutrien is still a company to watch as well as things move forward. All right, now another. I was going to say Canadian technology. I think Canadian technology will still be fine. I know we're having a little bit of issues with open text. They have been out of my good books for a little bit. But companies like Constellation Software and a lot of its spin-offs, I think they're going to be fine. I think they will do really, really well. Telecommunications, this could go either way. If the rates stay low, if we don't get U.S. companies, if Trump doesn't manage to get the U.S. telecommunication companies starting to move into Canada, and they get through their 5G the full 5G rollout, there could be some recovery there. But be a little more careful with your Bell, your Telus, your Rogers. I still think they will. I think they'll be fine on the other end. And quite honestly, if they're going to be down for a year, it might be a good opportunity to be dollar cost averaging. But I think they will. I think they'll be fine. I think they will absolutely be fine. All right, now one of the big, I guess there's going to be challenges and risks going forward as we're looking at the Canadian marketers. One of them, of course, is sector concentration risk. So if you are trying to move more and more into an all Canadian portfolio, it's going to be very easy to run into, you're going to get over diversified into sectors. There's no way around it. Especially if you end up getting, if you're looking to ETFs and all of your ETFs are really heavy in the financial sector, well, then guess what? You're heavy in the financial sector as well, or the energy sector, whichever sector it's going to be. So balancing that is always one of those things that's going to be fun. We also have to keep in mind global competitiveness. So Canadian firms, there may be some struggling initially to compete on an international scale. So it really depends, because you got to realize Canada's not in this boat by ourselves. Trump is talking about hitting everybody with tariffs. And right now, the steel and aluminum, that is on the world. That is everybody outside of the U.S. Now, mind you, most of their steel and aluminum is coming from Canada. So it's kind of feels like a Canadian tariff, but it is on everybody. And he's been talking about, well, of course, the reciprocal tariffs will be on everybody. And he's also talking about maybe looking at the UK and Europe next and the EU. So we'll have to see how that all works out. The other big thing, too, is that we are going to, as the economy starts tanking from this, we're going to see a big impact on the Canadian dollar. And there is going to be currency. There's going to be a lot of currency fluctuation, and that could very well play a role. I guess especially right now, if you're in that position where you do want to move out of your U.S. stocks, you are going to get more bang for your buck when you move back into Canadian, if that's what you are planning to do. There could also be a lot of supply chain disruptions just along the way, because these tariffs are going to cause a lot of problem. Even the whole, if you guys remember me talking about the Dominicus, that whole thing where all of these little tiny shipments that are coming across the borders, going into the US, those are all going to be hit with tariffs, which means they're all going to be looked at instead of being rubber stamped through. So all of these things that are ordered from China and all of these things from your different Chinese company, Temu, things like that. That's, you might be thinking, okay, well, that doesn't really affect the supply chain. Well, it might though, because if you have to look at all of these, do up all the paperwork and everything, and send off the bills to whoever ordered it, the duties, that's a lot of extra paperwork, and that's going to slow down things moving across the border. So it will absolutely impact supply chain, and there could be a lot of different unintended consequences, because Trump doesn't seem to get that this is going to hit the US really big at the same time. And this is all happening as he's got Elon Musk and Doge laying off everybody they can think of. In fact, I mean, they a funny little story, they went and laid off a bunch of their nuclear workers, and then not realizing how important they were, and then finding out, oh, these are the guys who handle our nuclear weapons. It's like, oh, we got to get them back. We got to get them back. So yeah, there's been a lot of interesting stuff for sure. But I guess the way I look at it is, in the end game, I think 100% Canadian portfolio is very doable. But you just have to manage the diversification challenges. That is the big thing. ETFs will provide an easier path to do that, less risky than individual stocks. So kind of interesting around in those best sectors, as I mentioned earlier, energy, financials, materials, tech, and agriculture. Agriculture, I think, will be pretty strong as well. And the big thing is, you got to weigh the benefits of domestic loyalty against the need for global diversification. So, take one of the community's favorite stocks, XEQT. XEQT. That, it's a great stock, but you're going to get, you're getting a lot of U.S. exposure with that. Pretty much. And I'm going to say right now, I'm not going to go 100% Canadian. I can't. To me, the diversification is just king. But I absolutely respect people who go 100%, and I will do my best to try to stay heavy Canadian, heavy as I can be. But I don't want to miss out on where AI is going. And I think there's going to be a lot of big explosions in tech. Now, there are options, like, let's let me pull this up here for a second. All right, we got our map. We still got our map. I didn't even use the map, but I made it anyway. I just felt like I needed to. BlackBerry. I want to go to BlackBerry. So this here is a good Canadian option. All right. Oh, looks like they had a little bit of a falling down. All right, but let's just go look at them here from the last year. And you can see that's just a little bit. And I always will say that when a company does this sort of movement, there's almost always a little bit of a correction afterwards, and that's fine. But this here is a nice solid one. I do think they have a good BlackBerry. I think is going to have, well, they've got their fingers into the quantum trend. With them, it's all about cybersecurity, passwords encryption, and some of their auto software. I think they've made a lot of good moves. They're no longer the irrelevant company that was, being used by Wall Street bets. They're actually becoming relevant again. So, BlackBerry, I think, is definitely a really good one on there. So it's kind of an interesting thing. But I guess we should use my map. We really should use my map. Let's bring my map back. So yeah, I mean, when you're looking at companies, you can see where I was pulling maps. Let's go to the draw. I'm just going to pull this up. I mean, your big thing is this border right over here. I'm just going to make it red just to make it a little bit more standoutish. We'll use some green here. So yeah, your big thing is if something is moving back and forth across the border, that's where you're going to hit those tariffs big time. That's where you're going to have your maximum impact. And you really don't want that. You really don't want that. Now, one of the things, and we've talked about this before, one of the things that I think is, we're going to come over here to the Great, whoops. All right. We'll come over here to the Great Lakes here for a second. Don't worry about that green out there. One of the things that is, to me, a little bit concerning is, I wonder, can I get a thinner? Can I get a thinner? I can take it down to 1. There we go. When you're looking at the I was going to say audio, the auto parts and making car manufacturing. So a lot of times, stuff is moving back and forth across the border to make a car. And as that's happening, look at it here. Imagine if this is happening, 25%. Right there. So there's 1. Another, so 1, 25% coming back. 2, up, there's 25. There's 25. Another 25. There's, whoops, 1 more 25 in there. So there's 6. 6 times 25. That's what? That's 100 and that'll work out to like 150%. That's on all of the parts. And that's the way manufacturing works. So, I mean, Trump's solution, and this is kind of what he's saying, is let's just build all of our auto parts down here. We'll just here's our auto shop here. Let's just build it all down here in the United States, and that will be fine. Wow, wonderful. Problem is, right now, this is what you got. This is what you want. Until, at least for the US, until this can happen, this here is going to continue to happen. And that 150, you're going to have, big prices down here in the US. You're going to have big prices in Canada as well. Whoops. It's going to just be flying back and forth across that border. Kind of sucks. It's the way it is. I don't know what we can do about it. Other than it almost feels like Donald Trump is that big baby who, you keep telling them, don't touch that pot. It's hot. It's like he has to touch it and burn his fingers before he realizes this is a bad idea. And he will. Now he's kind of got this whole idea. And I think he's got this envision where all of the tariffs and all that money being collected is going to just pay for everything. He's going to be able to get rid of the income tax and all of this. And he's going to be able to give, and he's going to give people a whole bunch of, I think 20% of all the money saved from that Doge is able to save as they cut things in the government. All that money, he's going to give that back to people. So you're going to have a situation in the United States where you've got a lot of inflationary forces trying to push prices up. You got people losing jobs because of these tariffs. So you have unemployment going up. All of these tariffs start impacting the economy, and you got the economy going down. So at some point, he's got to look at things and say, holy banana bread. I fucked up. Whoops. This is a channel member live stream. I can swear. But yeah, honestly, that was the only word I could really use for that. But yeah, that's what he has to sort of do. And from that, hopefully, then he needs to, and this is the thing with Donald, he will never just come out and say, I messed up or fucked up. That's what we said last time. He's never going to come out and say it. He's never. He needs to manufacture a win. Even if it's the flimsiest win you've ever seen, he will have to do that. So on the other side of this, we're going to have, we'll have Donald Trump creating some kind of a fake win. And then he'll say, yeah, I stuck it to Canada. Yep. They're afraid of me now. And it'll be all BS completely, but he'll come up with something. That's what he does. It's the art of the trade, I guess. So what can I say? Oh boy. That's Donald Trump for you. So we'll have to see what's going on with that. Oh, that's so good. Oh, guys. That's pretty much my content. So that's the content that I prepared. I did want to go in and take a look. Oh, we were looking at this. I did make a couple more things here today. Let's go back to all products. So, um, whoops. Yeah, here it is. So there's a Mr. Math mug now. So yeah, I was just playing with a few things. So yeah, here we go. There's a better picture of Mr. Math. Mr. Math. Should say it the right way. So we got Mr. Math mugs. Now we got what else do we got? Let's see, they're not too shabby, not too shabby. Where is oh yeah, here it is. I only made it in a t-shirt right now. But I made the first one of these. This is Canada's Not For Sale t-shirt. So it kind of ties into what we were talking about here today. So yeah, Canada's Not For Sale. There's a t-shirt. So one of the things I'm going to be doing with these products is, you guys have been giving me suggestions. I'm starting to put them together. Let's say, for example, you love this one, but the is not for sale, you want that to be red too. Let me know. It's not that hard. I can go back into the editing programs and make that red and put one up for you. So I'm going to be, I guess it's almost in a way we're going to be custom. We'll custom make them for you. If there is something you want, let me know. I'll do it. Or maybe you don't like that beaver. Maybe you want a hockey beaver there instead. Let me know. I'll get you a hockey beaver. Or maybe you don't want a beaver. Maybe you want, I don't know, the Mountain Finance logo there. That would look really dumb, but hey, if that's what you want, we can do that too. So yeah, I'm just sort of letting you guys know. I'm pretty versatile that way. We can we can design them the way you want them. So keep the ideas coming. I don't think there's a limit to how many I can have. Now, they are showing up now. Let's take a look. Oh, I was looking at Social Blade. Let's go to YouTube. All right. And planetary threat. Let's actually go to my channel. So now there's a new tab on the channel, and that is the store tab. So now you can actually click on the store tab, and you can go down and it'll show everything in here, all of the fun stuff. So there's Mr. Math. There's our Canada Not For Sale, the Trump Beaver, the not three different Not Too Shabbies. I don't know why I did that, but I'll make more. I'll be making more as we pull it all together, because as you guys know, we have our swag contest that's going on this month. So if we get to 25, I don't think we're going to get it this month. I don't think it's going to happen, but that means we'll start it fresh in March. March will pick up. Normally January and February I find is a little bit slow on the channel, just because, it's after the holidays. You got the January blahs, and the February shovel all that snow if you're in the east. Yeah, it's crazy. But yeah, that's what we got going on. So I am loving it. Loving it, loving it, loving it. Okay. Now I actually don't even, it's funny. I honestly have no idea if there's even anybody here. There's always people here, but I still have no idea, because where it is a private stream for for channel members, it does not give me a viewer count. So I don't know if anybody's here, but if anybody's here and you got some questions, drop them in, because otherwise we're going to start wrapping this up. I normally like to go an hour, so we'll give you a couple minutes here to come up with some questions, because make them hard. Throw some hard questions at me. Actually, throw a question at me that I have no clue what the answer is. Make me squirm because I don't know the answer. That'd be fun. Oh, that's good. That is good. Whew. I'll tell you, I am ready for whatever comes next. Spring is, I want to say spring is coming. It is, but it doesn't feel like it here in Ontario. I'll tell you today, I think today it was about -20 wind chill. And right now the cold has just been persisting, but we're almost into March. So they have that old saying, in like a Lion, yeah, in like a lion, out like a lamb. So hopefully the lamb part takes over sooner than later because, what a I don't want to deal with the cold any longer. Um, do. If you guys have not seen today, we did a video. It dropped for you guys on Hot L, so HUTL, and Hute HUTE. So if you haven't checked those out, definitely check those out. They give you a little idea on some income investing within utilities, and that's one of these sectors that I think is going to do a little bit better when it comes to what's going to happen with these tariffs. So definitely a great place to begin for sure. Um, I think I think this is the last of the income one for every so often we do like 3 or 4 income videos. I think this will be the last one. Oh, with the Evolve. Oh boy. I thought we were going to see it as early as Saturday. It looks like it's going to take a little bit longer. A funny thing, they asked me to add something to the video that I added. And then today they sent me a thing saying, okay, we're almost there, but you need to remove this and change this. I'm like, oh my God. One of the things I'm removing is something they asked me to add. So I'm like, oh boy. Sometimes, like I said, sometimes it almost feels like I'm being trolled by them, but we're getting really, really, really close. Tomorrow, I will, I have to film like quite literally one sentence. I have to film one sentence to cover up another sentence in there. Um, and that's fun. That's fine. At least I don't have to refilm the whole thing and get that back to them. So hopefully we'll see that we should see that video this coming week. And then the next one, oh boy, the rate it's going, maybe the summer. No, it'll be now I kind of got a general idea of what they want. So I know that they're just incredibly picky. But we're dealing with their compliance team. So basically lawyers. Basically lawyers is who we're dealing with. So all of that fun stuff. All right, guys. Well, if you're here, I don't know. Everybody might be watching this one on the replay. And that's fine. That's fine. This is for you guys. So I enjoy doing them. We're going to do another one of these, of course, next month. And start thinking ahead of what you guys want for topics, because this time around we didn't get a lot of suggestions, so I threw a couple fun ones in. I had a couple of legitimate suggestions, so the fun ones didn't win, but this one was kind of fun. I like this one. Actually, I really loved the thumbnail for this one. So anyway, I think that's about all I got for you guys. We are back on the air tomorrow. We got a market close. So 3:45, we will be on the air. That's Eastern, of course. And we will close out the week, head into the weekend. We'll be back, of course, on Sunday as well for this week. I have a feeling nothing crazy happened last weekend with Trump. So I have a feeling something crazy might happen this weekend. So that could be a very interesting show. All right, guys. Thank you once again for thank you guys for being channel members. I really appreciate all the support that you guys have shown me over the years, and we'll see you guys again soon. Enjoy the rest of your day. Have a fantastic night, and we'll see most of you probably tomorrow at the market close. Take care, everybody. Bye bye.